Hi, greetings of the day. Once again, warm welcome to our channel with a new topic of mean reversion systems. It has been a long break after I published my last video, and the reasons for same is I publish any video after thorough research on that particular topic, so that if any one of you try to trade on the same, has a very little risk and a reward is always up to the market. I always try to present you a very simple logics, which if traded with conviction, because conviction is too important. When I have been making this strategy, I have been working on it, be it paper, be it with real money. I have backtested it with on different parameters, lost my money either on paper, again the real money, modified my things, and now presenting to you. So conviction is very important for any one of you if want to trade on this particular strategy, or if any other strategies in the world, which can make a big difference in trading career of yours. As there is a saying in a Vishnu Puran, Lakshmi pehle samajh aati hai, fir aati hai. This statement has a very deep meaning in all walks of life and not only trading. This means that if you wanna earn from Mr. Market, you have to understand it so well and deep that it automatically start building the wealth for you, and that can only be done through research, back testing, and not what all. Now, in this video, I will be sharing an idea of Mr. Larry Williams' RSI strategy, which I modified, back-tested on different parameters, and now presenting in front of you. Yes, the win ratio is greater than 80%. Profit money has become 4x in 10 years of time, based on the back-tested data. Here, I will put an emphasis. This is based on the back-tested data, but in real time also, it is working very fine. So what is basically mean reversion strategy? Mean reversion, put it simple words, mean reversion trading assumes that over time the price of any asset will revert back to the mean or average price. In other words, there is an old saying, what goes up comes down to the average, what comes down will go up to the average. Now there are many methodology of trading mean reversion systems. They can be reversals, pullback trading, retracement, range trading system, overbought and oversold strategies. These are the major criteria of working with the mean reversion systems, and we will be focusing on overbought and the oversold strategies. Is mean reversion really working in the market? The reversion to mean trading system tends to produce a higher win rate in those instances where we can notice extreme changes in the price. The price fluctuates a lot. We can measure extreme price changes related to the time frame used. Obviously, there is also a probability that the price will never revert back to its mean at this point of time, say for example, when you have taken a trade, because it can indicate that there is a real shift in the market sentiment and we are in a new paradigm. As we are talking of the word RSI. So we also know that, RSI base are shifted. They shift upward, they shift downwards based on the price movement of the asset class. So that's what the saying is there, that you have taken a trade based on a certain logic, which I will be sharing in the next screen. Now, there is an RSI shift, base shift has been there. So obviously there will be a new average and there will be a new median, and the price will go to that particular price, not the price when you have taken the trade. So there are chances that it will never come back to that particular mean. And we can then say that the real shift in the market sentiment has been there, like from bull to bear or bear to bull. So what are the main advantages of the mean reversion strategy? It is effective in exit. The take profits targets is always the average price we are taking. It has a high win rate, as I have mentioned, greater than 80%, because the time window is very small for the exit, and it has a very good risk-adjusted returns. Now, we are using RSI as our tool here for the mean reversion system. We are talking of RSI 2, not RSI 14, which is widely used. We say that when RSI 2 falls below 10, it is considered to be oversold. When it rises above 90, it is considered to be overbought. And based on this, a fairly aggressive short-term strategies can be made. So let us see what the strategy is. First of all, we will be looking at the 200-day moving average of the indices. If it is the indices are trading above the 200-day moving average, we will consider it as a bull market or long only market. And if it is trading below 200-day moving average, then we will see for the short selling opportunities. But in this particular strategy, I am just focusing it as a long only strategy. We will be selecting the RSI component for our entry condition, RSI 2, that is the 2-period RSI. If in between 0 to 10, our value will be 9. This means if RSI 2 period falls below the value of 9, at the end of the day, we will be buying that particular stock the very next day on the open price. If the RSI 2 is in the range of 90 to 100, our value is 92, that is more than 92, we will be taking the trade of the short trade on the very next day based on the open price. Universe of stock, I have tested it on Nifty 50, 200, 500 constituents and found that Nifty 50 is working very well. Even 200 and 500 are working very well. But then the number of constituents are large. This means at one point of time, you can get 10, 12, 13 stocks, which are eligible for your entry criteria. Now, you have to find it out what are the best stocks among that 12, 13. So you can talk of, then you can take a momentum into the picture to find out, or, selective filter to done. But I'm focusing over here into the Nifty 50 constituents without any survivorship data. We will be using the close method. So we have to wait for the day end and we will then see what is our RSI 2 period based on the closing price. Our exit method will be 2-bar close. This means what? Say, for example, if a stock X has given a RSI 2 value lesser than 9 today, I will be buying that particular stock tomorrow open. So tomorrow will be my 1 bar. Day after tomorrow will be my 2nd bar. And I will be exiting on 3rd day at an open price, or you can exit on the 2nd day at a close price. That is the criteria. Or in between that, if RSI 2 reaches or shooted to more than 90, you can exit, or I will say you should exit. If both are not happening, then look on that close price if it is extending beyond the 5-day moving average. Preferably 2-bar close or RSI 2 greater than 90 will give you a very good exit in between 2 to 3 bars. Fine. Now let us see what are the results. The profit, yes, it has done 4x. SQN, that is the strategy question number, is 2.63, and profit loss percentage is 80-20. Now, what is SQN? It is noted by Mr. Van Tharpe in his website and in his work, which determine that how well the strategy can be, used or what quoted for. So, since I've been working with Python and the Backtrader documentation says that 1.6 to 1.9, it is below average strategy, 2 to 2.4 is average, 2.5, 2.9 is good, ours is 2.63. So I can say it is a good strategy, and so on. Now let us move down to certain results, which I will be showing you just a minute. So this is the file of Nifty 50 constituents based on the RSI 2 and 2-bar exit method. So if you see, we have all the Nifty 50 constituents results, trade analysis, drawdown analysis, everything is mentioned in this particular thing based on the 10 years of the data. Assuming we have a capital of 2 lakhs when I'm starting this back testing, this 2 lakh is, distributed among the number of stocks. If, say, for example, more stocks are coming, then I will be using a momentum criteria to find out which are the best one to enter the things. And 100 is my size. So I will be buying only 100 shares of any of the scripts which comes into my entry criteria. So this, which I'm projecting to you, is basis 2 lakh of capital at the start and buying only 100 shares of the stocks which are eligible as per the entry criteria. If more than the stocks are there, wherein my capital is going beyond 2 lakhs, then I will be using the momentum to find out which are the best one. This momentum word I am right now not discussing because it will extend the scope of the video, but generally it will not happen. So you can see we have Adani Port given some profit, Asian Paint loss, then Axis Bank some profit, Bajaj Auto profit. We have a loss in Bajaj Finance, Bajaj Finserv is a profit, BPCL. Then we have Bharti Airtel is a profit. So we have this. So around 80% of all the stock net to net has given the positive close. You have every detail which I will be sharing on the Google Drive link. So you can go through with everything here. How many trades were executed, how many won, how many lost, what was the number of longest winning streak, what was the number of highest losing streak, and all those things. Coming back to, let me show you that algorithm. Otherwise you will say, just a minute. So this is my code. I have been using Backtrader and a Python and a Yahoo for getting the data. So you can see this is my code over here. My exit method is self.duration2, that is the two-bar close method. And then I am analyzing everything over here. This is the Nifty 50 constituents. And if you come below over here, here. So here I have been getting this testing results for this Python code. And this is what I have copied on the notepad, which I have shown to you. It is exactly the same which I have shown over there. No data manipulation has been done. So this is all from my side. I believe you can anytime go back to the strategy, have a read on it. I can share this, or definitely I will share this particular text file with you so that you can just have a glance on it, build a conviction on it, and trade well. Thank you.